This is Carl with your weekly livestock update for Friday, February the 14th. Not really any big single stories in the market this week for livestock, but is several small ones, and a lot of them are some that we just continue to follow with some developments. But starting out, bird flu was again a news story this week. Several veterinarians were reported to have gotten an outbreak of the disease or contracted it through animals. So that was a bit of a shock to the market, but not enough to do anything really that concerning. I think we've come to the grips that bird flu is here and it's here to stay. There's a lot of concerns through migratory paths, so that we could see several new outbreaks of the disease this spring when the birds move back. It really never slowed down over the winter months, so I mean that's not that hard to believe. Bottom line, in the past past 30 days, 23.1 million confirmed birds with bird flu. That's just in the past 30 days, and it's probably going to get worse before it gets better. Not going to do a lot to benefit them egg prices, unfortunately. The other thing in livestock this week, we did see our export demand fall off a cliff. Beef demand down 50% from a week ago. Pork demand less than 50% of what we had the prior week. Big concerns about China. China canceled beef purchases and was absent from the pork market. Some concerns there, this close to the end of the Lunar New Year. Typically, we see China starting to rebuild their red meat reserves after that week-long holiday celebration. Haven't really seen a big push to do so. So, we're questioning what the consumer demand does really look like in China. Also starting to see a little bit of concern about what the consumer demand looks like in the US here moving forward. Some pretty negative economic data came out this week. Started with inflation. Inflation took a jump when we got that CPI index reading. And then this morning here, Friday morning, we got the consumer spending report, and consumer spending in the month of January was down 9%, well below trade expectations. Trade's only expecting about a 0.03% decline. So it doesn't seem like a lot, but it is in the grand scheme of things. And consumer spending slowing is actually a good sign. Um, Theoretically, that's why we're in an inflation bubble, is because we have consumers that don't quit spending. Interest rates backing off, a good sign, but with inflation starting to creep back up a little bit, a lot of chatter in the market that before the end of the year we could see an interest rate hike. That is not good news. That caused panic in the US dollar today and did bring a lot of managed money buyers back to the commodity complex. So, good news for us there. Weekly production numbers on beef and pork came out here Friday afternoon, and really not anything totally surprising. Looking at the numbers here, and I'll read them to you. Beef production 489.2 million pounds on the week. That was down 4.2% from the week before. Cattle slaughter down 3.9% at 564,000 head. Not too surprising given the weather we had across the Corn Belt. We had some storm systems move through, disrupted cattle movement. Going to see that again this weekend and into next week. We've got these systems training across the U.S., and it's really disrupting our fat cattle movement. Pork production steady on the week, 553.6 million pounds. Hog steady, also steady on the week at 2.54 million pounds. Here's what I want to continue to point out, and I know I'm really beating this to death, it seems, but it's a factor. Hog weights on the week up 2 pounds from last year, 292 pounds. It's really not a big deal. Hogs, you can pretty much dial in 290 to 293, and that's what you almost get every week to week in, week out. Beef, though, the carcass weight for the week, 919 pounds, up 45 pounds from last week. Live weight, 1,439 pounds. That was up 50 pounds from a year ago. So you see where we're going here. These heavy weights continue. We did get the balance sheet update from the USDA on Tuesday of this week. The only number that jumped out at me from the red meats was the beef production for 2025. The USDA bumped it up 780 million pounds. These fat cattle weights are a big reason for that. We're going to start letting cattle back in from Mexico, but they're not going to flood us with cattle. We are seeing a little bit bigger cattle numbers cross the border from Canada. Most of them are feeder cattle, though. It's these higher weights, definitely getting noted by the market. You know, USDA is using 833 pounds per head in their balance sheets as far as the carcass weights. We're pushing 100 pounds heavier than that. Even at these, slow slaughter numbers of 560,000 head, it adds up pretty fast. So, bottom line, we did see a lot of managed money leak out of that cattle complex this week. We knew it was about to happen. Question is, where do we go from here? 185 to 190, I believe, will catch us on the fat cattle. Feeders, we might have to take a little bit of a thumping on the feeders. I just don't think there's enough bearish information to drive us to, the 220, 230 mark. But a normal correction would take us back to those levels. We'll see if the inventory overrides historical trends a little bit. Hogs really look like they're trying to put in a bottom where they're at. We see down days, up days, but really hogs, they do appear trying to find a bottom where we're at least. I can't say hogs take off and rally sharply from where we're at with the consumer demand and export concerns, but at the same time, our production has dropped on pork where we should maintain the market where we're at. Those are the top stories from this week's livestock trade.